you did some interesting survey work asking Starbucks customers what they would do in reaction to sort of these unionization efforts. So tell us your big takeaways there.
Yeah, great. Thanks for having me on. So look, I think the greatest risk to Starbucks at this point is a loss of market share and tarnishing their brand. So, we went out and we surveyed consumers to see what they think. And we found that, only 4% of consumers said they would never visit Starbucks again if the unions and Starbucks couldn't reach an agreement. The vast majority, 68%, said it would have no impact on their visit frequency. 15% said they'd visit less. 13% said they'd actually visit more. I think those two kind of cancel each other out. So we just don't believe there's going to be a major consumer backlash here against Starbucks if they can't reach an agreement with the unions. So, at this point, I think this is a thorn in Starbucks' side. I think this goes on for a while. But in the end, I don't think consumers are going to push back enough to really push this to a fully unionized staff.
Peter, it's been a rocky few weeks for Howard Schultz as the CEO of Starbucks. A lot of interesting comments that he's been made to employees as he's out on these listening tours. Is he the right person to have this job right now?
Honestly, I can't think of a better person to be running this company. I mean, he's come back several times. This is his third stint. He's the visionary. He's got the passion. He's got the drive. And I think he's going to be here for an extended period of time to see this company through this, call it rocky time and kind of get it back on better footing post-COVID and post this unionization push. So, yeah, I can't think of a better person to be running this company at this point.
Getting back to the union stuff for a minute, Peter, one of the interesting things you dig into in your note is the idea that Starbucks employees tend to be temporary, right? And so it's not like an employee at an auto manufacturing plant or a flight attendant, for example, someone who stays in the job for a long time. So how does that inform the sort of union dynamic, the likelihood that these folks will sign up for a union, and then how it plays out if they do?
Yeah, no, it's a great question. So we don't really understand how this will work out for some of these employees. So I think some of the employees that are voting to unionize today, given that this may take a year, if not longer, to see it through, if it does go through, likely won't be Starbucks employees when a union is formed and when a contract is signed. Look, the industry turnover right now is closer to 300%. You're turning over your staff three times a year. Historically, that number has been closer to 150%, and Starbucks has been materially better than that. Even if Starbucks' turnover is 100% or 150% today, I think a lot of those employees that are voting today won't see it through. So, I think the benefit of a union is that you get, pay increases year over year. You get healthcare improvements. You get education benefits year over year. But if you're only in the job for 6 to 8 months or maybe even less, you're paying dues for something for a benefit you may never realize. So I think it's a little strange that they're pushing for this. I do think Starbucks will find a common ground. I think Howard stepped in. I think he will probably make some investments in the labor force and probably find some common ground to kind of stave off this union effort.
Peter, you cover, as we mentioned, the whole restaurant industry. Is that turnover you talked about, is that pretty universal among fast food, quick service restaurants? And if so, do you think we're still going to see this union push extend to other companies? I mean, the interesting thing to me about Starbucks is, and the union pushes, Starbucks is on the higher end of the pay scale. If you look at it versus a McDonald's or some of the other fast food companies, right?
Yeah, well, that's the other strange or portion of this is, Starbucks is going to be at $17 an hour average this summer. That is industry leading. They also have industry leading healthcare benefits and education benefits and time and paid time off. So they have historically been the leader in terms of what they pay their employees and the benefits they give to them, and they continue to be that way. So they are the leader. They're above average. So what are the unions pushing for? From what we've read, they're frustrated by the high turnover. They're frustrated by scheduling, staffing shortages. None of those things can be resolved with a contract. They could be tempered with, call it menu simplification, to make the job a little bit easier and have things flow a little bit smoother, but not with a contract. So it's a little strange as to what's happening and what they're trying to push for. It's still a little bit unclear as to what the union is actually looking to gain right now.
Peter, let's stay on the state of the industry because, in fact, you, of course, cover restaurants more broadly. I picked my colleague up a coffee at Starbucks the other day. I believe it was over $7. I mean, there was real sticker shock to that. And I think the average cost of a Big Mac we were talking about earlier in the week is close to $6. Just given all these inflationary pressures, how big a problem is it going to be for the fast food industry that their food is no longer cheap?
Well, you're right. It is no longer, call it cheap, but on a relative basis, I think the restaurants over the past year have been raising menu prices by around 6%. In some instances, you're seeing that a little bit higher, call it 8 or 9%. Some instances, maybe a little bit lower. But that 6% is, call it, around 3 times a higher price increase than the historical number that restaurants take. And that's been a function of the spike in commodity inflation and the real increase in wages, right? So if we were talking about this, a year, 15 months ago, the fight for 15 was real and coming up aboard. Now we're talking about $17 an hour in wages at Starbucks, so well above that $15 an hour. So, the restaurants have to keep up, right? They got to charge more. There really aren't any other options. But also food prices in the grocery store have gone up as well. So on a relative basis, I think they're matching the inflation that's going on in the industry and really in the overall economy. So yeah, you're right. It's not, call it cheap anymore, but it's going up in line with everything else in the industry.
Well, at the rate things are going, Peter, we'll have the fight for 30 and the $10 McDonald's Big Mac. We'll leave it there. Peter Saleh, BTIG restaurant analyst. Always good to see you.